You're listening to the Good Food CFO podcast, where we focus on financial strategies for building a profitable food business. I'm your host, Sarah Delavan. Today on the podcast, I am joined by Danielle Hayden, founder and CEO of Kickstart Accounting, an accounting firm designed to help female entrepreneurs understand their financials in order to grow their business and become more profitable. As a chief financial officer for more than 10 years, Danielle loved accounting, but felt like something was missing while just helping investors and boards of directors at large companies. That's when she realized her thrill for helping entrepreneurs, especially women, who were breaking the rules of business in order to create something amazing, something the rest of the world didn't expect them to do. Danielle and her team support me and my business, and they provide expert bookkeeping to several of my clients. In this episode, we're discussing cash and accrual accounting, specifically what the difference is, why it matters, and how the type of accounting you choose ties to your taxes. We're also discussing the necessary elements of successful accrual accounting systems and the serious effects of not doing it correctly. Let's get to it. Hey, Danielle, welcome to the podcast.
Thank you so much for having me here.
I'm so excited to have you here today because you and I have been working together for how long now? Over 2 years, I think.
It's been a while. Yes, I was thinking about it. It has definitely been a while now.
Kickstart does my books. Sarah Delavan Consulting works with a number of our clients and Kickstart Accounting. And I just love working with your team, a team of women who are super good at their job and really awesome to collaborate with, you included. So just a public thank you to you and your team for being so great.
Yes, of course. Thank you. Thank you for that.
Yeah. I think one of the coolest things is that prior to starting your company, you were actually a CFO. Yes. And not only that, but you were a CFO within the food industry. Can you share a little bit of your background with us?
Yeah, it's interesting. I worked with so many different industries over the years now that I almost forget that it all started there. So I worked as a CFO for, I want to say it was a mid-size company. And what was really fun about this experience was that not only did I get to watch it grow, but we also got to sell parts of the business and then rebuild. So we talked about this a little bit last time. Our goal of the management team was to build our revenue, and everything that we did was set to grow the business in order to be sold. So it was very, very intentional in the way we did our accounting and the way we did our purchasing and our hiring. And so I say that because I think it's really important for us to all be intentional in what our goals are in business. And so everything we did was really intentional. We had an ingredient that we put in a consumer goods product, and then we sold the consumer goods product and kept the licensing to the ingredient. So we went from a B2C to a B2B, and then we started selling that ingredient to other businesses. And they would actually put that, it was a probiotic. And so they would then put that probiotic and other businesses would put it in their food and then resell the product from there, and then regrew that business. And I wasn't there for the second sale, but ultimately, again, the goal of the business was to be sold. So all of those important decisions about inventory, how we sourced our goods and materials, how we did our hiring, how we did our purchasing, everything was in line to grow and sell that business.
That's super interesting. And then did you leave that role and immediately start Kickstart?
I did not. So I actually worked as a CFO for another organization in a completely different industry. And that's why I always say good accountants, I know you can be very niche in what you do. You don't have to be, right? Mm-hmm. So for us, we do serve multiple industries. And I think that has made us really diverse in being able to speak to our clients, because we're not just speaking from one industry. We're speaking from the vast experience. So I was a CFO for another company. They did advertising and marketing. And then I started Kickstart while I was there, and then eventually left that position to take the full-time leap to Kickstart.
That's awesome. And one of the reasons I love working with you guys so much, and I was introduced to your organization through a client. So they were already working with you. And as we often do, we partner with bookkeepers to do our work, and got introduced to you, really liked the partnership that I felt I had with you, like through that client immediately, and just started sort of connecting you with folks that I knew needed good bookkeeping support, who either didn't have a bookkeeper or who, had one and they weren't a good fit because they didn't have industry knowledge. So even though you're not super niche, you do have folks on your team who really understand the food industry, which is a huge value.
Yes.
And I get asked a lot, like, do we do bookkeeping in-house? And I always say no. And it's for a really good reason. I feel like it's important to have my services and bookkeeping services separated so that we can collaborate, not necessarily from two different points of view, but I just think there's so much more power in you and I and one of the bookkeepers on your team coming together to provide value to a business owner, rather than it all just being one mind under one roof. I just think there's a lot of power in that.
I think there's been a lot, like we've seen it happen over and over again with your clients. So absolutely, I can attest to that. And also you need to have the strong bookkeeping, right? Because it is the foundation. So how do you do any additional analysis without the bookkeeping? So it was really interesting when I started the business. I didn't know that we were going to become the business that we are today. I spent a lot of time at a higher strategic level. And over time, what I realized with a lot of entrepreneurs is that we don't have the foundation set. So any of the strategic level conversations we were having, the budgets that we were trying to set, the analysis that we were trying to perform, none of it was relevant because it wasn't on good data. It was on make-believe data of what the business owner wanted, right? Like it was, well, I think it should be, or I want it to be, right? And that's all well and good before you start your business to set business projections. But from there, you need to have the foundation set up to have good information to be able to do any other analysis. So I really think that's something that really sets us apart and then sets you up for success and with your clients is being able to have that foundation set.
Yep. Yeah. And you guys are such valued partners. I can't say it enough. And real data, true data is kind of at the core of, or is at the core of what we're talking about today. So I wanted to bring you onto the show to talk about cash versus accrual accounting for a couple of reasons. Number one is I had a couple questions in our free community about the differences. What is the difference and sort of which one should I be using? So I knew that there was a need to sort of talk about that. And then we've experienced some shared clients who either came to us with accrual and we've backed them out to a cash-based accounting. And then we've also taken a couple clients from cash to accrual. And I think it's important for people to, again, understand what the differences are, but then really understand who should be using accrual accounting, maybe who it's not the right fit for, and what the purpose really is. And I think that there's, again, when you do it right, and when you have books that are set up for you, you can do a lot with that information. So why don't we start by just talking about cash versus accrual? What is the difference and why does it matter? Why do you have to choose one?
Yeah.
Loaded question. I know.
Big heavy. This can get really confusing. So luckily, this is on a medium in which you can pause, rewind. So if you need to re-listen to it, pause, rewind. I'll try to simplify it as much as I possibly can, though. So cash accounting, what that means is that everything's based on the time that the cash enters your bank account and leaves your bank account. So you do not consider revenue until the cash actually hits your bank account. So for instance, if you are invoicing your client, your customer, and that invoice has not been paid, you would not consider that invoice as revenue until the cash actually hit your bank account. Same for expenses. So for cost of goods sold, we are considering it an expense the day that the cash leaves your business checking account, not when you sell the goods and service. Does that make, does that work for cash? I feel like
that makes
cash
sense.
is relatively easy.
Yeah.
Okay. Accrual, I feel like, is where everyone's heads and eyes start to roll. So accrual is very different in that you can consider revenue the minute that you invoice your client. So in that same example, we invoice our customer and that invoice amount becomes revenue the day that we send that invoice. It does not matter if the customers pay that invoice or not, or when the cash comes in, it can sit there for 90, 120, a year, outstanding. It does not matter. From the eyes of the IRS and the eyes of your bookkeeper, if you are on accrual, the day that that invoice goes out is the day that you consider that revenue. Now, what gets really tricky is the cost of goods sold. When you go and buy bulk inventory, you are going to put that inventory into a balance sheet account, which is it's sitting as an asset. So it sits on your balance sheet as an asset in an inventory account. So now you're telling the IRS and your bookkeeper and your accounting, I have inventory that's sitting in my warehouse or my kitchen to be used in the future, right? So this includes packaging, labels, and then all the inventory that's going to be required to make that your product. Now, it'll sit there as inventory until you sell the product. And the day that you sell the product, when you recognize that invoice, you're also going to recognize the cost of goods sold. I'm going to stop there because we'll go into all the issues from there. But that is the difference between accrual and cash. Accrual, you are really matching the expenses to the revenue. So despite when the money comes in or out, you are matching the expenses to the revenue. Cash, it doesn't matter when you sell it. It just matters when the cash comes in or when the cash leaves your account.
Right. So let's just talk really quickly about like COGS again, just to kind of clarify under a cash basis accounting, when you buy that inventory, whether it's packaging, labels, or ingredients, the day that you buy it, right? So the money went out of your bank account to buy all of that, it hits cost of goods sold.
Correct.
Under that cash accounting. So I think you might have said that, but I just wanted to repeat it post the accrual explanation to get really clear about that. So the IRS is going to want you to declare whether you are a cash-based business or an accrual-based business, correct?
Absolutely.
Okay. So this is a decision that as a business owner, you need to make.
And you can't flip-flop back and forth. So you can't each year flip-flop between cash and accrual. You can change. So it's not like I'm saying at day one, you have to decide this for the rest of your time in business.
Yeah.
But if you choose cash, you can't go to accrual next year and then cash the following year, just because one is more tax advantageous than the other this year. So the IRS is onto that game.
And in QuickBooks, if you're listening and you've looked at your P&L in QuickBooks, you know that there's a toggle between running your P&L in a cash-based view versus an accrual view. I'm familiar with some folks who, they've got a cash-based business. They're reporting to the IRS as a cash-based business, but they're running their P&L as accrual. And I'm just curious if you see any like pros or cons to doing that.
So if you're running your P&L on accrual and that's what you're looking at throughout the year, you're not going to be prepared for your taxes at the end of the year because what you file your taxes on is going to be different. Right. And so I want you to be looking at, now you can look at both, right? Like you can look at, but you have to look at both, right? You can't just look at the accrual base because you're going to ignore what you're going to use to file your taxes. And therefore you might be over saving or under saving for your taxes.
I love that. I think that's super important. And I agree, when you're a cash-based business, you're invoicing your customers, they're not paying for 30, 60, 90 days. You might want to just get a view, and the P&L is a place where you can do that. So what did we bill this month? right? But then we also want to look at how much cash did we bring in this particular time frame. Why would someone choose accrual accounting versus cash-based accounting? Like who needs accrual? And the reason I'm asking this question is because I've been seeing, on the internet, experts,
interwebs.
Yeah, talking about, quote, if you want investment, you need to be doing accrual-based accounting. And I think that that's a dangerous recommendation to just put out there to everyone. And something that I actively try to do on this podcast is talk about strategies that are right for your business, right? There's no strategy that's right for everyone. So I think it's dangerous to say, if you want investment, you need to be on accrual. So I want to drill down into who is it right for, or who is it a good fit for?
Yeah. So I think that accrual-based accounting is great for business owners who have the time and the resources, the personnel, who are able to accurately report your financials on an accrual basis. And I say that because I want to say 90% of our clients that we work with at Kickstart Accounting, that they are on cash basis financials, because it is very costly to either, as the business owner, make the time and energy, or to hire somebody who their sole position is to value your inventory. So when you're on accrual-based financials, you have to have an inventory count at least quarterly, but I want monthly, and an inventory value. Mm-hmm. So you need to understand, as you make your product, what is the value of your finished good? And so at the end of the month, you need to be able to report to your accounting team, this is the value of materials I have in labels, the value of materials I have in boxes, the value of materials I have in raw materials, and then in finished goods. And so we have to be able to report that value at the end of each month to ensure that the balance sheet is correct. Mm-hmm. In terms of cost of goods sold, we also have to know the value of every single product we sell. And so depending on how many products we have, that'll determine how complex this is, right? So we have to be able to value every single product that we're going to sell, and be able to tell your accounting team, your money team, how much each product, as it's being sold, how much of that costs you to make that. Yeah. And what I'm finding even more this year, we are facing rising costs across the board on everything. And so it was difficult 1 year ago, 2 years ago, 4 years, 5 years ago, to value your food costs on a regular basis. Right now, it is changing every single time we purchase something. And so you have to have the resources, the team members, the systems to be able to revalue every single time you are buying and selling something. If not, what ends up happening is that as you're selling material, like as you're selling your product, you're saying the cost of goods sold is lower than what it actually cost you. And so you're going to end up with a larger value on your balance sheet and inventory and a lower value on your cost of goods sold.
And there's trickle down issues based on that, right? If you're undervaluing your cost of goods sold, you're potentially overvaluing your profit.
Yes.
Well. That's an issue that you're literally going to pay for
when
it comes to tax time.
And you're going to have to revalue it at some point. So you're going to have to fix it. Like if you do a count once every 6 months or once a year, you're going to end up fixing it at some point. So if you are only doing an inventory count once a year at tax time, then you're going to end up making a large adjustment at the end of the year. And every month when you looked at your financials, every single decision that you've made throughout the year is, I'm going to use the word incorrect because it is incorrect, right? Like, it sounds harsh, but it's the information you have is wrong. And so I have seen multiple clients get funding that were not on accrual-based financials. And because they can report accurately what is the revenue coming in the door, and what is the money, right? Cash at the end of the day is still king, queen,
Yep.
right? So what your investors are going to care about is what cash is coming in the door and what cash is leaving the door. And when you're in cash basis financials, you can accurately report that. And I don't believe that as small business owners, we can always accurately report that in the same way on accrual basis financials. And these investors know. They're going to ask you questions like, well, how are you valuing your inventory?
Yeah. Yeah. And I want to dig into the value of inventory because I saw this mistake when we do profit assessments for businesses. We do a deep dive into their financials and recently picked up on this just extremely high. It was an inventory adjustment, and the adjustment was just really large compared to revenue, and just things looked wrong. And I asked a couple of questions and discovered that the business owner was valuing the inventory at retail, not at cost.
Ooh, yeah.
Right. So just in case anyone is making that a mistake, that really, it just messes with your books. And like, there's just, again, it comes down to accuracy. I think you and I are very much on the same page with, we want like 100% accurate data for our business owners so that they can really truly count on the information they're looking at to make sound decisions, right? When you talked about the intentionality of the businesses that you worked for in your career as a CFO, you can't have that if you have misinformation in your financials, right? You can think you're being intentional, but you can be misguided.
Yeah. I mean, my team and I will literally hold financials due to inaccuracy. We are sticklers on accuracy, and for a reason, because if you are out there making business decisions with inaccurate financials, you're hurting yourself and your business. And we want to ensure that as you're deciding to take on an investor, right? Mm-hmm. As you're deciding which products you're going to sell, like, you have to be doing it with the right information. And I'm really glad that you brought up that story, because I've seen so many times where there is a misunderstanding that the value on the balance sheet is of your retail price, and it is not. It is for what you purchase that inventory for. That is so important. And that's why with these rising costs, it's so hard to value our inventory right now, because it's ever changing.
Let's break it down. Maybe just like bullet point for listeners. What are the elements of a successful accrual accounting situation, I'll call it, because we know it's not a set it and forget it kind of system. So what are some of the like tools needed or people needed, as you touched on earlier, to really be successful at accrual accounting?
Yeah. So we need to have either a system in place or a person in place, and maybe a combination of the two, who are tracking various things. So the first thing we're going to track is our inputs. This is all of our purchases that we are making for our inventory. So as we're out buying boxes, labels, raw materials, we are tracking every single purchase, the quantity purchased, and how much we purchased them for. Next, we're going to take the raw material and we're going to create the batch, the product. So now this individual / system has to track how much of each of the materials are being put into a finished good. So they have to be able to track all of the values that we purchased it for and pull that into the finished good. What becomes confusing is we might have purchased bananas 3 times, right? And which set of bananas did we use, right? So the system or the person has to be very detailed in which purchases are going into the batch, so that we know the cost of that batch and how much those finished materials that are coming from that batch, what did those actually cost you to create? Another big thing is waste, right? Unfortunately, in this industry, we do have waste. And this is a big area that we see with our clients that we don't track. And so a successful piece of accrual accounting is tracking what is waste. So as you are creating that batch, what was thrown out, right? Well, what could it be used? And then from there, we have to be able to track our samples. So again, so many of us use samples as our advertising, marketing. That's right?
Yeah.
That's
Yeah.
fantastic. I want you to be doing that. However, if we're not tracking our sample expense for what it's costing us, not retail, but for what it cost us, our value of inventory is going to be incorrect. So this person or system has to track inputs, the cost of each batch, waste, and then the sample expense. Lastly, they will also have to be able to track the ending value of the inventory. And they should be able to do that once we have everything input correctly and tracked within that system.
Yeah.
Our value should be correct at the end. And that person or system should be able to attest for that.
Yeah. And then when that product is sold, which batch are we selling from so that we are moving things out of inventory in a consistent manner, right? And so the proper value is hitting the books at the time of sale.
Yeah. Yeah. Which batch did we sell? Which value do we use to record our cost of goods sold when it is actually sold? That is so detailed, right?
Yeah.
When I did this a long time ago, we had, you had a SKU number on every single, right? You had a SKU and a batch number. This is a very detailed, concise process. So to have a successful accrual accounting, you need to have that detail eye and that detail system to be able to monitor each of those.
Yeah. And we talked about some of the pitfalls earlier. Something that can help you avoid getting it wrong is just what you said, having a system and really having a person who knows that system and who can, I think something I've run into with multiple clients when onboarding and really looking into their financial workflows and their systems to make sure that we're pulling accurate data. Like that's a big part of the work that we do together is, from two different angles, we're looking at, is the right data coming in and is it getting to the right places? And is what we're looking at valid? And we find errors within the system. And it's typically because no one owns it, right? Like the founder of the business or someone on the team set it up and created it. And then, maybe there are multiple people who will run a batch or enter information and it can get a little bit messy. So I think what you touched on is having a person who really is responsible and owns it and can analyze and make sure that everything is correct. We were just looking at some inventory numbers the other day and products were coming out with a 1 cent cost. Like we know that that's not accurate, right? And it's hard to catch on the P&L if you're not looking at the P&L in detail sometimes, right? If you're just looking high level at your cost of goods sold, you won't catch that. So luckily we look at the detail. So we do catch it, but it's not just enough to have a system and to sort of set it and forget it. You have to have someone on the team, I think, as you said, to really be responsible for it and make sure that it's right.
If everyone's responsible, no one's responsible.
Oh my God. Yes.
I truly believe that. And, when we have team meetings or even client calls, I'll say, who's doing that? I'm sorry. Hold on.
Yeah.
When you are considering accrual accounting, you have to understand what role you play and what role each of your team members are going to play.
Yeah. Yeah. I love that advice. I want to touch on quickly inventory tracking tools. They get messy. I mean, my experience with them is that they are just so messy when you're syncing, Shopify or whatever tools directly to QuickBooks. It just gets messy. It seems like it's never right. So I think I just want to PSA, if you're trying to track inventory, also don't just let a syncing tool do it for you.
Amen. We have over the years, it's this like marketing tool that all these point of sale systems, all these different systems say, we sync with QuickBooks by us. Guess what? Like 9 times out of 10, when we start working with a client, we terminate the sync. And usually if they've already had QuickBooks and the point of sale system already synced, we start a whole new QuickBooks file because it's already destroyed.
Yeah.
It is so difficult to rely on the sync. They are not accurate. I think we've had, God, I mean, I can think of 2 clients in 8 years where the sync worked beautifully.
Yeah. Again, it's like, that's a sales tool, right? Like when you're talking about Shopify, like it's a sales tool. It can't do everything for you. And accounting and tracking inventory is very specific. It has to be done correctly, and to rely on a sync from a company who that's not their expertise can be, I don't want to use the word dangerous because that's a little too aggressive, but can cause a lot of headaches, can cause a lot of problems in your numbers.
Can be dangerous though. if your inventory is on, I mean, we talked about like, if you're understating your cost of goods sold or overstating, right?
Yeah.
It can be dangerous. As you grow, it is important as business owners that we are setting up the systems, the processes, the back end to be able to be scalable. So the start of this question was, when we think about investments, right? So if you're thinking about bringing on an investor or an investments, you have to have your back end ironed out, because it can be a costly mistake to the investors. It can be a costly mistake to the IRS if you have any lenders. So I don't want to like brush under the rug, right?
Yeah.
Like it can actually be detrimental to your business if you are not reporting the right information because you're relying on that sync.
Yeah. And for everyone listening who's not seeking investment, this is all equally important for you as well. You are investing in your business, right? Every single day, both as an individual and financially. It's like, we want you to have this right for you as well. I think something that we're saying without explicitly saying it is that simple is okay. And I think that the cash-based accounting is what we would consider a simple way of doing it. Something you and I talk about with our clients a lot is like, what do you want? Like, what is the objective, right? When a client comes to us and says, I'm tracking inventory and I want to do it on accrual. And it's like, why? You got to have a really good reason. And if you don't have a really good reason, and you also don't have the resources to do it well and successfully, Danielle and I will convince you to go cash. We just will, because it's better for you in the long run. And like you said, it's not that you can't change to accrual accounting in the future, but for most small businesses who have really small teams, simple is okay. And there's no need to rush into or to overcomplicate your life and your books by trying to do accrual-based accounting.
And if we can just talk about a highlight of using cash, right? Because I don't want someone to hear like, simple's okay. Like I'm settling on something. I want to highlight a benefit of being cash. We had a client, we've been working with them for a few years. And so we've gone each direction. Okay. So they were cash and they wanted to go accrual. And so for an entire year, we did the journal entry, right? Put all the systems and the information in place. And then she came to us and said, well, I can't figure out how much money I'm spending on inventory. And so we were trying to run some reports from the balance sheet and showing her that, what was being purchased from the inventory, like in the inventory accounts. And she's like, yeah, that's not doing it. And what she really wanted was to be able to see how much money's coming in the door and how much money is going out the door each month. Yeah. And I said, well, why are we doing this accrual thing? And she's like, well, I don't know. I thought I needed to.
Yeah.
I'm like, okay. But the information that you want in order to be able to run your business, in order for you to be able to make the best business decisions, is to understand how much money is coming in and how much money is going out. Yeah. And so therefore, cash was the better fit for her, right? It gave her the information she needed in order to be able to make better business decisions to grow her business. And so simple doesn't mean that you're giving up on anything, right? It's giving you the information that you might want.
Yeah, you're right. It's not settling. It's not being, a simple business or dumbing down your accounting and bookkeeping in any way. And I think something that both of us do when we sit down with a new client is say, what are your goals and objectives, right? Like, what are your goals for the business? What are your goals for your finances? And then understand, where are we now and how do we get you where you want to go, both with your business as a whole and also with your financials, so that you have what you need to support you. God, that story is just so familiar. There's like similar stories running through my mind right now, where a few months into working with someone, they'll say, well, what is the profit margin of this sales channel or this product? And it's like, well, you didn't set up your books in a way where that becomes easy. So now we've got to do a little bit of work. But having clarity on what information is helpful for you and what you want to see as a business owner, I think is like of the utmost importance when you're working with a CFO and a bookkeeper, because we'll customize to what you need and what you want.
It's also okay to not know. So we also see that from the other direction is, a lot of our clients, when they originally start working with us, will say, I don't know what I'm looking at.
Right.
And so if you're somebody who's listening to this saying, well, I don't know right now,
Yeah.
right? Like, I don't know, you tell me what's important. We always start with we have a proprietary strategic framework that we use for all of our clients when we start working with them, and it is industry specific. So if you're not sure what's important today, you might have high level goals, right? But you don't know what numbers I need to look at in order to hit those goals. We use our framework to set out the rest of the P&L. And then again, because nothing's set in stone in business and life, as time goes on and you develop as a business owner or you pivot and you change, we continue to change the structure of the P&L to help aid those goals. So I just want to say that if you don't know, that's okay.
Yeah. Thank you for saying that. And I think a couple important things that you just said is like, one, your P&L can change. It reminds me of like when it's time to go to college and you're 18 or 17 and like, what do you want to do for the rest of your life? Like, I have no idea. I could try this thing out. You know what I mean? I think the P&L is sort of the same. Like, we do the profit assessments as our initial step. And that also helps us to see like, what do we have in the P&L right now? Where can we improve and get better information to the business owner? And I think you're right that like, if someone's not familiar with their financials, they don't really know, they can't really know what they want to see. And it's when they start to become familiar and start to ask certain questions that then you can start to tailor the reports to them specifically and change it. And I think it's really important for people to know that your books can change, and, hopefully you find a bookkeeper who's flexible and who will grow with you and who will say, oh, that's a great idea. Yes, let me support you in finding that information out and delivering it to you on a monthly basis.
Gosh, I can't tell you how many times over the years we've had clients who don't book a call. And we offer, it was part of our services, a monthly or quarterly call.
Yeah.
I don't care if you use it once or twice a year, but you have to talk to your bookkeeper because they are not in your head. They're not standing next to you making your product. They're not boots on the ground with you.
Yeah.
So you have to talk to them to tell them what's changed in your business, what strategy has changed, what goals have changed, because your bookkeeper wants to help you. Right. I believe that all of us are in this industry because we want to see business. Well, at least I'm going to talk for myself. I want to, I don't know about everybody, but I truly believe in entrepreneurship. And that's why my team and I do what we do. We want to serve our clients. And so if they tell us this is what's important, or this is what's changing, we can change what our reporting is to help them.
Yeah.
And I know it's scary to talk about money. And it's scary to talk to your bookkeeper, although I think we're pretty darn friendly.
Yeah.
I mean, I think I would want to get on the phone with us.
Yeah.
But even if you're working with somebody else, right? Like even if you're working with another bookkeeping firm, talk to them, right? And if you can't talk to them or you don't want to talk to them, then you need to contact the business owner and say, I need a different team member, or you need to find a different team that you do want to talk to, because they can change what they're doing to help you.
I really think that the entrepreneur bookkeeper relationship is collaborative. your bookkeeper sees it's like spending and expenses, but there's a level of detail that if they're not filled in can be missing, right? Like I'm thinking of a client right now who is launching, they've been a farmer's market business. They're launching into selling wholesale direct, and they're selling through a singular, like I'll call it point of sale system, right? And if they don't let their bookkeeper know, hey, we're beginning to sell in this new channel, they don't know. It's not always crystal clear, depending on what system you're using, if suddenly you're selling cases of your product versus single product, or that the price is like a bit different, right? Simply emailing them and being like, hey, we're launching this and this is the product. And also having a conversation about what's the best way for us to invoice for this product or to sell this product. Because, something that I'm really big on is that financial workflow, which going back to accrual-based accounting, right? Like that's a financial workflow. It has to be working the right way. And, that goes for everything in your business. When you've got a new strategy, when you're launching a new channel, talk to your bookkeeper, talk to your CFO to make sure that you are, number one, both on the same page and aware of what's going on. And number two, things are set up so that it's like seamless, right?
I can hear the excuses from clients already. I'm so busy. I don't have time. I can't, I don't care if you call me from the car, from one place to another. Talk. It's your responsibility as a business owner. So I think as entrepreneurs, we can kind of sit behind these excuses of, I'm not a numbers person. I don't have time. I'm so busy. You decided to start a business. And because you started a business, you have customers who rely on you. You have vendors who rely on you. You might have contractors and employees who rely on you. You have a responsibility to look at your numbers. You have a responsibility to talk to your bookkeeper, to talk to your CFO, to update them on the strategy. It's not a nice to have. It's a requirement for you to succeed. And if you're not doing that long term, you're not being responsible to your customers and to your vendors and to your employees.
Yeah, I agree.
It's tough love, but
yeah, no, sometimes we need it, right? If folks listening have questions about accrual versus cash accounting, if you want to dig a little bit deeper into this conversation, you can join us in the free community. You can tag at sarah.delavan.consulting. I might try to lure Danielle into like an Instagram live or something.
Sounds fun.
Talk about it, right? Could be fun to answer some of your follow-up questions. Sometimes numbers seem boring. Sometimes numbers seem scary. Sometimes numbers seem all sorts of things to people. But I think what you just said really hits home. It's like, as business owners, it's our responsibility to be in touch with them, to be connected to them, and to understand them, and to make sure that they're accurate. So you've got permission from us. If you're doing accrual-based accounting, it's a nightmare, or you're not confident that the numbers are right, you can switch to cash based. You've got people here who can support you. So Danielle, if anybody wants to connect with you in regard to working with Kickstart Accounting, or just, to learn more, where can they find information?
Yeah, come to kickstartaccountinginc.com. Inc is really important. We can talk about your specific situation. So if you are not sure, or you have any specific questions, when you come to the website, there's a pretty blue button to book a call. You can talk to the team about your specific situation. We have our podcast, Entrepreneur Money Stories, that you can listen to. We're on a mission to make sure that every single episode has action, right? So that you can walk away with something that you can implement in your business. Yeah, I would love to hear from the audience. This is obviously my favorite topic, and I know that's pretty loaded, and I know that there's always a lot of questions. So I'm happy to be a resource, and I'm more than happy to do the Instagram live. Sounds fun.
Awesome. Great. Well, thank you for joining me here today to sort of, I think, set a foundation on this. To, I think, hopefully get people thinking about it and taking action in their business as well, so that they have reliable numbers and that they can grow the business of their dreams on their own terms, which is a big part of our mission here as well. So thank you, Danielle. I so appreciate you. I'm so glad you joined us.
Of course. Thank you.
Thank you so much for joining me here today. If you haven't yet, please consider rating, reviewing, and subscribing to this podcast. It's the number one way that you can show your support for the show and help us reach more food and beverage business owners. If you'd like to continue the conversation, join us in the free Profitable Food Business community. You can grab the link to join in the show notes.